Coming up, we take a look at cash use in Australia, cost impacting access to healthcare, and uranium stocks soar on the share market. Details next. Hi everyone, it is your daily 10-minute business and finance news wrap for this Monday, the 18th of November 2024. The Australian share market rose today, but only just by 0.2%. We'll have the details with Kyle Rodda from capital.com. But first, using cash to pay for essential items like groceries may become a lot easier, with the federal government looking to force some businesses to accept the form of payment. Now, the latest data from the RBA from about a year ago shows cash payments have been steadily declining over the past 2 decades, halving to 16% in the 3 years to 2022. And that decline is coming from all parts of the community, from the young to older generations. But it still plays an essential role to the payment system. So for more on that, I spoke earlier with Kathleen Walsh, a professor at the University of Technology Sydney Business School. Kathleen, first of all, what role does cash play in society right now?
Well, right now, that's an interesting question. Historically, cash has been a replacement for the old barter system. If we wanted to actually exchange goods with somebody, we'd have to have that double coincidence of wants. They needed to want my sheep if I wanted to have their bread type of thing. So what cash gave us was the medium of exchange. So it means we had a universally accepted form of currency we could share with each other. It meant we could have a store of value. I could then, accumulate this cash over time. And we also had a unit of count, which meant that at any point in time, I could compare products based on one stable point of reference, which would be cash.
Right now, though, does it have a place in society?
Look, I think it still does. I know we're in an incredibly digitised situation at the moment, and we're looking at a lot of currencies are actually even moving to digital currencies, and the entire financial system is becoming digitised. But there's still a need for financial inclusion. There are a lot of Australians who still actually use cash on a daily basis and feel more comfortable with cash. Maybe they're locked out of the environment or the financial banking system because of a number of reasons. Maybe they're elderly, maybe they're suffering from domestic abuse. They need to have cash as a way of actually excluding themselves from the banking system. But also I think that with this rise of digital economies, we also have the rise of risks. So we saw what happened with the CrowdStrike issue in July this year, where we ended up with the entire financial system crashed. And so at least in that situation, we did have cash that could still be a form of currency.
What kind of a role do you think cash will play in the future? Will it still be around?
I think it'll still be around. It'll just be at a minor. I don't know about you, but I've been carrying the same $50 in my wallet since the beginning of COVID. I'm quite comfortable with using electronic means of transfer. I wouldn't I wouldn't have any concerns with the money in my wallet being a digital currency versus a physical currency. But I know there's some Australians who actually do need a physical currency and are much more competent and confident with that. And I think for exclusionary reasons, we should make sure we're more inclusive in our banking system, which means including cash going forward.
And finally, I guess the discussion today has been about having some essential businesses providing essential services like your supermarkets and certain businesses, for example, having to deal with cash. What do you think about that? And do you think there should be some exceptions?
Well, there could be some exceptions, but if you think about essential services and that whole point of accessibility for all, we need to be ensure that if somebody has only cash at their disposal, they need to be able to perform essential services with that cash. So if you had, say, for example, all supermarkets not accepting cash, that's a massive problem. But a small number of, local grocers, for example, who have concerns around security or concerns around process, who want to just go digital only, I can understand that. But I think we just need to think about, from the individual point of view, if I was only a cash user, can I have all of my essential needs met using cash?
That's Kathleen Walsh there from UTS. Now to cost, which is proving to be a significant barrier for disadvantaged Australians accessing healthcare services. The Bureau of Statistics says in areas of most socio-economic disadvantage, 11% of people delayed or went without prescription medicine when needed due to costs last financial year, and 27% delayed or did not see a dentist when needed. And those two stats are around double the rate of people from areas of least disadvantage. For more, I spoke with Danielle McMullen. She's the president at the Australian Medical Association. So Danielle, what does this say about how cost of living pressures are impacting access to healthcare?
Cost of living pressures are really hitting Australians hard at the moment in all areas of their life, and unfortunately including health. People are having to make that tough decision between getting the healthcare they need and paying for things like putting food on the table or school uniforms for the kids. And that's a situation that we shouldn't be in a country where we really value access to healthcare and where governments need to be investing money and making sure people can access the healthcare they need.
Okay, so given these stats we're seeing today, what do you think can be done about this to improve access to healthcare, especially for those in disadvantaged situations?
So some steps have been taken, and a really good example of easing cost of living pressure has been 60-day scripts from your pharmacy. So people living in areas of socio-economic disadvantage, in fact, all people with chronic illnesses can now talk to their GP about getting a 2-month script for their regular medicines. And for people on a concession card, that means getting half-price medicines. And so that really is an important step in helping people ease the cost of their care. We've seen some improvements in bulk billing incentives from government to help support people most at need, but we know there needs to be much more investment in general practice. There's a lot of people struggling to meet their healthcare costs who don't necessarily have a concession card. And so we are calling on government to make further investments in general practice as that core of the healthcare team and make sure Australians can get healthcare they need when they need it.
That is Danielle McMullen there, the president of the AMA.
Now, Market Day on the SBS On The Money podcast.
The Australian share market rose by the end of the day. The S&P ASX 200 up by 0.2% to 8,300. It didn't do much for most of the session, though. So to tell us why, I spoke with Kyle Rodda, a senior market analyst at capital.com. Kyle, after all the post-US election excitement on the share markets, Aussie shares are pretty much steady today. Why do you think that is?
Not much of a lead, really, and not much of an impetus for the market today. I mean, Wall Street has dropped and did drop on Friday night. In fact, has given up its post-election rally. Some concerns now that maybe that Trump trade isn't so good for equities after all. But I mean, for domestic markets, we're really seeing some kind of crosswinds at the moment, push and pull factors, if you will. On the one side, that fiscal stimulus in the United States is a good thing. We're seeing some resilience in US economic growth over there. But of course, there's these trade tensions and concerns about the global economic outlook. So again, it's a bit of a sort of a neutral one as a result. Not much of a lead to go off today. But all in all, investors just trying to digest the impacts of the US election and of course, what that might mean for interest rate policy as well.
Before we talk about the US election in more detail, commodities, though, in focus, because uranium at least did very, very well today.
Yeah, and there's a little bit of a sort of side story going on with the uranium sort of complex at the moment, which is twofold. One is a supply side story, and that's related to news over the last 3 or 4 days that Russia has banned energy exports, enriched uranium energy exports to the United States. So obviously those sort of supply concerns there, as well as, I suppose, trade concerns there as well. But the other side of it too is this kind of artificial intelligence narrative that's building, and that's the demand side of the equation, where a lot of major tech companies are suggesting that they more or less flick on nuclear plants to, fire up the data centers required to be able to power the AI revolution. So we're seeing a very strong thematic there at the moment with uranium, and so uranium stocks were amongst the best performing today. Okay,
back to the US election, which you mentioned. Is Trump good or bad for markets? Today we heard from the guys at Goldman lowering its growth forecast for Australia as a result because of those potential tariffs on Chinese imports into the US.
Yeah, well, it's good for some. It just depends on who we're talking about. If you sort of look at the way US trade policy is going to work and also US fiscal policy, on the fiscal side of things, fairly significant stimulus as far as tax cuts are concerned. That's good for the US economy, boosts demand. Of course, there's inflation risks down the line. That's a little bit further off into the future. However, if you look at the way trade policy works and effectively the way the Trump administration will work in foreign and trade policy, it's very much a zero-sum game. So what almost by design it's hoping to do is shrink the pie globally in order to put the US at a strategic and economic advantage at the same time as increasing the US's share of that now smaller pie. So Again, is it good? Well, it depends who you're talking about. For the US, yes, a rather good thing. For the China, well, clearly not. Investors are concerned about that. And there is the expectation that because it will have a negative impact on China, that the Trump administration will have a negative impact on China. On balance, that will be a bad thing for the Australian economy and Australian markets as well.
Any company news catching your attention today?
There wasn't too much out there, but there was some noteworthy downgrades from Citi on Cettire and Lovisa, both for sort of individual concerns, but both fit into that consumer discretionary complex. So we're still seeing this underlying concern within the market about how some of Australia's consumer discretionary stocks or consumer stocks more broadly perform in what has been a fairly sluggish demand environment, very much bucking some of the trends we're seeing in the United States, for example, by contrast, where we're seeing that resilience. So a couple of downgrades there. Again, there were some individual company reasons as to why that happened. But still, another theme that's happening at the moment is very much looking at what the consumer backdrop will be in Australia and how that might impact consumer discretionary company profits.
And in this environment, it's changing. You've got a new US president. There's implications potentially for inflation. Where are the opportunities for investors now?
Yeah, well, again, it almost goes back to that discussion about winners and losers under a Trump administration. And I think a nice way to sort of frame the way that an investor with a kind of global mindset, it has to be said, but also, you can tie that back into domestic themes because of, clearly the impact on the material sector and what have you, is looking at how sort of the new sort of bilateral relationships with the United States will benefit or perhaps be a detriment to particular markets, and how sort of funds have to be allocated according to that sort of, again, new zero-sum world of kind of tit-for-tat trade wars. So, for example, a big thing recently has been some weakness in China's markets, commodity prices, the Australian dollar, because of those concerns about US-China trade tensions. However, there's been some beneficiaries of that trade. For example, Japanese equities being boosted not just by the weaker yen, but by also the prospect that Japan will benefit from the flows coming out of China, as well as the better trade relations between the US and Japanese. So again, it's all sort of trying to allocate according to the sort of changing geopolitical dynamics that we're seeing because of the US election, as well as these continued thematics about US economic strength, our performance, and what that means for interest rate policy going forward in the US and also across the world.
That is Kyle Rodda there from capital.com. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.